European markets took a nosedive today. This follows the implementation of new tariffs by the United States. Investors are worried. They fear a trade war. This could hurt the global economy. Businesses and governments are watching closely. The tariffs are having a ripple effect. They are impacting various sectors. These include energy, mining, and banking. The situation is tense. The Stoxx 600, a broad index of European shares, plunged by 2.5%. Germany's DAX index wasn't spared either. It fell by 2.1%. The energy sector was hit particularly hard. Energy stocks tumbled by 3.8%. Mining stocks followed suit, dropping by 4%. Even banks, usually seen as more stable, saw a decline of 2.8%. This widespread downturn reflects the market's anxiety. The US tariffs are in retaliation for what the Trump administration considers unfair trade practices. These practices include subsidies for local industries, intellectual property theft, and trade barriers that disadvantage American companies. The tariffs, which came into effect on April 9, 2025, target a range of EU goods. These goods include agricultural products, machinery, and luxury items, aiming to pressure the EU into negotiating more favorable terms for the US. One example is a hefty 20% levy on certain products. This has led to increased prices for consumers and businesses alike, affecting everything from groceries to industrial equipment. These tariffs are the latest salvo in an ongoing trade war. The conflict has seen both sides imposing and retaliating with tariffs, creating a cycle of economic tension. The Trump administration has repeatedly used tariffs as leverage in trade negotiations. This approach aims to force trading partners to the negotiating table, but it has also led to strained relationships with key allies. This strategy has created uncertainty and tension in the global economy. Markets have reacted with volatility, and businesses are facing challenges in planning for the future amidst the unpredictable trade environment. Germany, Europe's economic powerhouse, is particularly vulnerable. The country's finance minister, Jörg Kukies, issued a stark warning. He said Germany faces a real risk of recession. Trade tensions are a major factor. Germany is already feeling the heat from existing US tariffs on cars and metals. These new tariffs could exacerbate the situation. A recession in Germany would have significant implications for the entire Eurozone. The impact of the trade war is being felt beyond Europe. The ripple effects are causing significant disruptions in various sectors, from manufacturing to services. Oil prices have slumped to a 4-year low, driven by decreased demand and oversupply. This decline is putting pressure on oil-dependent economies and industries. Investors are fleeing riskier assets, moving away from stocks and commodities. The uncertainty in the market is palpable, with many seeking safer investments. They are seeking refuge in the perceived safety of cash. This shift is evident in the increased demand for liquid assets and short-term government bonds. This flight to safety is a clear sign of market jitters. Financial analysts are closely monitoring these trends, as they could signal deeper economic issues. It also reflects a lack of confidence in the global economy's trajectory. Businesses are feeling the pinch, with many scaling back operations or closing entirely. The European Central Bank is expected to cut interest rates next week. This move aims to stimulate economic activity and counteract the downturn. This is an attempt to bolster the weakening economy. However, the effectiveness of such measures remains to be seen, as global uncertainties continue to loom large. France is taking a tough stance against the US tariffs. The French government has been vocal about its discontent with the recent trade policies imposed by the United States, which they believe are unfair and detrimental to their economy. French Industry Minister Marc Ferracci urged French companies to hit the brakes. In a recent speech, he emphasized the need for solidarity among French businesses to protect national interests. He wants them to halt investments in the United States. This move is seen as a strategic effort to pressure the US into reconsidering its tariff policies. This is a direct response to the ongoing trade dispute. The trade tensions have escalated over the past few months, affecting various sectors including manufacturing, agriculture, and technology. Ferracci's call to action underscores the seriousness of the situation. He warned that continued investment in the US could undermine France's economic stability and leverage in negotiations. It highlights the potential for the trade war to damage economic ties between the US and its European allies. The situation remains fluid, with both sides showing no signs of backing down. The coming weeks will be critical. Analysts are closely monitoring the developments, as the outcome could have far-reaching implications for global trade and economic stability.